Now that we know trading is a business and it's a legitimate, profitable, long-term business that one could invest into, and that we also know that trading is not gambling if you do it the right way, and that there is an art to trading the markets, we now need to explore finding your edge within the markets and how do you find a trading system that fits your lifestyle and your personality type. So let's explore what is an edge. Well, quite simply put, an edge is having a higher probability of one thing happening over another. That's what allows you to have an edge over the market, and that's what allows the casino to have an edge over the player. They have a higher probability of one thing happening over another over a long period of time, or a large sample of trades, or a large sample of the roulette wheel spins, or whatever it may be. If we try and put this into a very simple analogy, let's take a coin. If I had to ask you what are the probabilities of a coin landing on heads or tails if you flick it up into the air, you would say quite quickly it's a 50-50. Now if I take the same coin and I weight one of the sides and I make it slightly heavier so that it increases the probability of landing on one side versus the other, and I flick that coin up, you'll start to see that that 50-50 ratio starts to change. And let's say that will increase the probability of it landing on heads by 65% of the time, and it will land only on tails 35% of the time. If I take that weighted coin and I flick it up in the air, which side of the coin will you call every single time? Without a doubt, you'll be calling heads, because you know heads will show up 65% of the time, and you'll be wrong. Yes, 35% of the time it will land on tails, but over a large sample of spins of the coin, you will be more right than you are wrong. And that is what an edge is. And that is what we need to try now explore and find out, how do we gain our edge over the financial markets, and how do we build a trading system or find a trading system that works for us? Because everybody's in a different space. They've got different commitments, they've got different personality types, and a lot of these things have an effect on the way that you trade the markets. Let's first discuss what makes up an edge and the core components of a trading edge. In my opinion and my view, these are the core components that make up an edge within the markets and how much they contribute towards your edge. Others could have a very different perspective, but this is my own opinion, it's subjective, and this is from my own experience. There are 6 core components that I believe that makes up a trading edge, a successful trading edge, should I say. The 3 smallest components would be quite a surprise to you. Number 1, trading signals, trading process, and intangibles make up about 30% of the 100% of your edge. Most people spend so much time focusing on the trading signal, the next best system, and they're trying to find the holy grail of trading, and they honestly believe that where they enter the market and how they enter the market and the system that they are using will bring them fortunes overnight. I'm sorry to break the news, but the trading system and the trading signal is not the be all and the end all of a trading edge. It is needed in order to know where to enter the market and how to enter the market. You need a system, but your trading signal is not the holy grail that makes up your edge within the markets. Over and above that, the trading process is pretty much the process and your routine of trading. How do you identify trades? Where do you start? Where do you end? How do you go about planning your trading routine? That's what I refer to as the trading process, and that often helps to create a bit of routine and methodology in your trading. And then the other segment is intangibles. These are things that are out of your control. They are outlying market movements like news and certain things that take place that are unexpected, and they create swings in the market, and it's just things that are intangible. They're out of your control. They have an impact on your trading, but there's nothing you can do about it. So between those 3 sectors, it adds up to 30%. We then look at the other 3 are the more critical components of a trading edge, and that is self-discipline, trade management, and risk management. Let's start off with trade management, that I believe contributes about 20%. Trade management is what you do when you're in the trade. So after you've done your trading process and you've got the trading signal and you enter the trade, now managing that trade while it's live in the market is absolutely critical. This is about ensuring you stick to stop losses. It's about ensuring that you manage your take profits and you keeping up to date with how your trade is progressing. After that, I believe, is risk management that contributes 25%. And we spoke about this in the previous video around not risking too much of your portfolio on any one single trade. It's about taking smaller trades and knowing that your winners will be larger than your losers and trying to preserve capital. All that risk management does is it preserves capital. It keeps you in the game and it prevents you from being wiped out. If you go all in every single time, eventually you're going to lose your account. Even if you do that with half your account or a quarter of your account or 10% of your account per trade, eventually you are going to get wiped out. You need to be risking a small portion of your portfolio on every trade in order to find out whether it will be a winner or a loser. And that is where risk management comes in. And then finally, self-discipline. This we've also spoken about and how critical it is to stick to your trading rules and your methodologies. If you start to break the rules and you start to veer off track from your trading system, you will begin to erase your edge within the markets and lose your profitability over the long term. So now that we've discussed the core components of an edge, what are the key pillars to creating an edge? How do we go about creating an edge and what makes up that edge within the market? Well, any edge in any trading system needs, first of all, an entry. You need to know where you enter the market. Where's your stop loss going to be placed so that you prevent incurring large losses and affecting your portfolio size? And then it's about risk management, controlling how much you're risking per trade. And lastly, it's your take profit. Where do you get out of the market at a profit in order to bank that and grow your equity curve higher and higher? Always remembering that your profits should be larger than your losses.